I'm joined by Lina Omole, Senior Manager, Tax Department at Deloitte, and Nicholas Kahero, Senior Manager at PwC, to help us demystify what to look out for if you are in business. Welcome to the conversation. So the government has invited as well citizens to give their views on these matters, and there are a lot of mixed reactions on these particular proposed bills. And I want to start this conversation with Lina, and my first question to you is, looking through the bill, and I know you have chewed through it, I would like you to tell me one or two things that you say these are good propositions for Kenyans and for businesses in this country.
Yeah, so as you've said, there's a lot of conversation about this bill. What I'll first say is that, as many people have said, it's a mixed bag. It has good and it has some things that might need to be relooked at. Some good things, and I think stakeholders have really lobbied the government on this, is, for example, exemption of exported services from VAT. I think that's a good move. There's also, very recently, last year, there was an introduction of interest restriction that covered both foreign loans and local loans. I think it's an excellent move that the government has now excluded local loans from these interest restrictions in terms of deduction. So it only covers foreign sourced loans, and I think that's good for businesses, because many businesses rely on debt financing to run their businesses. I think that's a good move. I think a good one for Mwananchi is exemption of LPG from VAT. That's a good move. I also, one of the ones I like is this post-retirement medical fund, because that has real benefit if it's taken up, and I hope there'll be some incentives so that, you know, our retired citizenry can access medical insurance, which I think is a big need in this country.
Oh, you're right, and I think that one touches a lot on people, because medical bills sometimes can become very emotive and huge, especially for people in their advanced stages. Let me come to you, Nicholas, as well. I don't know whether Alina has said all, but are there some quick wins as well that you feel this is good as well?
Picking up from what Lina has said, we have seen the reduction of the withholding tax on rental income from 10% to 7.5%.
Oh, that's good for landlords.
That's good for landlords. At least now they can breathe ease and hope they can start now complying, and we see an uptick of in terms of compliance. And then another bit that we have seen also as well is for telecommunication sector. We have seen an expansion of the capital allowances applicable to telecom equipments now includes the civil works. So it means, at least from their perspective, they can claim a huger chunk of the investment that they do put when they are setting up their businesses.
Okay. And I think those are quite good wins for the people in the sectors, especially also in the real estate, as you have said as well. Now, let's get to why we have a lot of mamas, and I think the mamas are quite more than what we have had on the good side of things. There's quite a disquiet on the proposed bill, and I know you have quite a chunk of them, and I want to just shoot straight to some of it. And Lina, let me start with you. Let's talk about what is required for businesses and the net effect. First of all, I feel like there's a rush for the government to collect taxes. There's this narrative of 24-hour. I don't know whether they borrowed this from the betting companies. I think maybe they borrowed that from there. And I don't know, what is your first feeling about this, and what do you see as the net effect of this?
So before I even talk about that 24-hour rule, I think overall, it's just too many changes at the same time, which sort of then brings the question of stability. I know it's a new government, they're sort of trying to communicate what their fiscal policy is, what they're prioritizing, but it could have been good for us to see them stagnating some of these changes, because bringing in so many changes in 1 year, knowing that we have had quite a lot of changes with COVID, and all, of course, we're in a recession and inflation is high, the Kenya shilling is depreciating, it would have been good to sort of stagnate it a little bit over a couple of years and still achieve the same outcome. So I think that's part of the hue and cry. It's just the sheer size of the finance bill and the proposals that are there. Then I also think part of it is because if you think about the issues that we are picking out in the finance bill that we would like amended, some of them have very significant implications. You've mentioned one, paying tax within 24 hours. That has significant cost impact in terms of administering that, and that should certainly be factored in.
Yeah.
And saying that I need to pay my withholding taxes in 24 hours and you only give me until 1st of July to prepare for that means that you're actually asking me to take on all this additional costs and uncertainty that many business may not be able to accommodate in such an economy. And there's a couple of other changes, and we can go over them, that certainly must be looked at.
Okay. And I think I want to pick from that, because I think what you're alluding to is that the administration of this within those particular 24 hours is the cost that will be hitting businesses big time.
True.
And I don't know what's your quick thoughts as well, Nicholas, on that, because I'm thinking, personally, let me call myself an SME.
Yes.
I wait for the 20th to breathe at least and prepare the accounts and everything else so that I can do this. Hitting me with 24 hours, it's out of the core.
Yeah, it's a bit unfair. I think the government wants us to become the tax collectors on their behalf and remit the taxes within 24 hours.
Yes.
I understand where they're coming from. They're facing a lot of liquidity crush. And the issue is then, if we are facing a lot of liquidity, why do we place now this problem to the taxpayer? Ideally, the government should plan itself the same way businesses plan themselves in terms of cash flow management. So pushing taxpayers now to account for your taxes within 24 hours, it means I have to change my whole business process. For example, we have an approval, maybe we do our payments once in a month. I have to change now to ensure that each day subsequently I have to pay the taxes, meaning that I have now to fit my organization based on the government's problems. So I think it's an unfair obligation or unfair burden that's been placed on the taxpayers. But we're in a hard place. The government wants this cash.
All right, we'll come to propositions and what we suggest to them. The other element that I picked up was, and I want to start with Nicholas on this, is addressing the tax disputes. I mean, why am I supposed to pay for me to address my issues? And one of the things that they're talking about is a deposit of 20% of the aggrieved amount. I don't know what's your thoughts on this, because last I checked, the court had overruled this completely. Now it's back. Is it that the disputes are so massive? What's the agenda behind it?
Still, the issue about liquidity crunch. The government wants this tax as early as possible. They are saying taxpayers are using the appeals process to delay the collection of taxes. So how do they work around it? They say, okay, let's collect 20% deposit. One thing, I think it's quite unfair for taxpayers to be demanded deposit. Remember, our constitution is based on equality of access to justice.
Absolutely.
If, for example, I have to pay 20% of the tax demanded, and you find nowadays they issue big assessments. You can get 50 billion assessment, 20 billion assessment. That's a whole working capital of a taxpayer that's being held in form of deposits. I have to finance, meaning that's another cost of business I have to incur. I think the government has to relook it. This is the third time they are bringing the same issue. I think they have to look it hard and try and maybe find a way of collecting this tax. Is it reduction of the rate maybe to a reasonable, or leave this issue of deposit to the High Court? Let the High Court judges decide how much they want paid as deposit. It's not a blanket amount or a blanket percentage being given by the government or through the finance bill.
And I like that angle of saying that this is a lot of money being held up, and some businesses may not afford that. I don't know whether Lina, you had anything else to add on
I mean, bottom line, it's unconstitutional. And I think that's why it has failed in Parliament 2 times before. There's something to be said about the government reintroducing over and over again something that Parliament has rejected before. Perhaps that is one of the areas, something like that is something that they should really be serious when, we give in our comments as stakeholders to revisit, because I think it's, bottom line, it's unconstitutional, and I hope Parliament can once again just reiterate that point.
You're right. I think the net effect for me is for the business owner and anybody who is seated there, that we need to enable more. Already, as you said, we are starting from a season where we're feeling this is quite something huge. I mean, the environment is not very conducive for businesses, and so we need to look at how we can do it better. I don't know whether it's a thirst for new administrations to come with totally new, and I don't think there's anything wrong with coming with new agendas and all, but I think we need to be very careful to safeguard the businesses that enable these governments to operate. Let me bring in the element of affordable housing, and Lina, I want you to address that, because how housing is a very emotive issue. Everybody wants to feel, I got this home. And you touch on it, but now you're telling people you have to give it. And in fact, some people did the math, and they're saying, okay, 3,000 shillings. Sorry, it's a 3%? 3%. I mean, 3%. 3% doing the calculations of the amount, and versus the 7 years, it is a 7-year period. I mean, it was coming to about 400 to 500,000 shillings. And what house is that? But let's come back to you. Let me ask you about what's your quick thoughts on the introduction of the affordable housing percentage deduction?
Okay. I mean, I think that conversation cannot be had without thinking about accountability for taxes. I think most of the resistance around this National Housing Fund issue has to do with, can we really trust that the funds we hand over to government for this period of 7 years will be applied to the purpose for which we have contributed it? If the government can get to a point where there's a bit of trust between, you know, government and us who pay these taxes, and of course these are individual taxes, that can address some of this resistance. Secondly, this is also coming on the back of increased NSSF, a higher marginal tax rate to 35%, proposed increased NHIF, employment costs are going up for employers, which means there will be resistance because it is the same 3 million employees who are going to be still carrying this burden. And then obviously you've done the math and you said the minute you come to 600,000 after 7 years, it cannot buy a house. There's certainly an income issue in this country. I haven't seen a house
of that amount.
No,
unless you have.
There isn't. So in fact, the question is, are we being honest when you're talking about this fund? Is it really a housing fund? Will it address the housing issue in this country? And we do have a legitimate issue with housing, and I appreciate the government's focus on housing, but the government might need to refocus and rethink how to achieve housing for Kenyans, given the low incomes, given the high construction costs, given the rate of unemployment. They've actually said that the reason why they introduced this is to create employment opportunities for Kenyans in the construction industry. But you can't really create employment in that way, you know, because then what happens after you've finished building houses?
You're right, and I think you've addressed that very well, Lina. Let me come to you, Nicholas, and I want to just bring a new element of it as well. The net effect of increasing turnover, 1% to 3%. This is what I feel. We had that discussion, I think, a year or 2 years back when they had tried to do that. Now, 3%. I don't know, I feel like they're caught in fire.
Not really. Do you know what happened was, remember when the previous regime offered reliefs because of COVID measures, they reduced from 3% to 1%. This is the one only relief that was granted during COVID measures that was never overturned. So this government, what is doing at the moment, it's restating back to where we were, to 3%. However, what they have done also, they have reduced the threshold. Now, trying to expand the tax base. So previously it was 1 million, now it has reduced to 500,000. So everyone who has a turnover above 500,000 and above are required now to account for turnover tax. Although it is optional, it means that the government, what it's trying to achieve is expand the tax base, include as many as possible in the informal sector to tax to the tax net. And however, or unfortunately, you'll find these are hard to tax people. So these people can easily go underground and they vanish and they may miss their objective.
Nicholas, did you say it's optional?
It's optional,
Okay, guys,
so you can decide.
Take note of that.
You can opt to go for turnover, or you can go for the normal corporate tax rate of 30% where you claim your expenses.
Okay. That's a good one. I think people here, you have to be creative in how you choose and what you choose to go by, right?
True, I agree,
Digital content creators have been hit with 15% withholding tax on income earned. And I feel there was a whole conversation that we're moving to the digital economy. I think the government may have seen there's money there, and of course there's a lot of movement on that. So I don't know, Lina, what do you feel about this?
So this is
part of enlarging by the
this is part of enlarging the tax base. Maybe what we need to understand is that this withholding tax is a new introduction. However, this income has always been taxable, because what the law says is you should pay tax on your income that is accrued in Kenya. So content creators should have already been paying tax. The legislation doesn't say whether this is a final tax or an advance tax, because it doesn't say we can assume it's an advance tax. I guess the question is the rate. 15% is quite high compared to what they would normally, the others, management and professional, which is at 5%. And it may be that these people are coming into the tax net for the first time to come and pay tax at 15% as a withheld amount. So that may discourage, content creators. I think they should have started with a lower rate. But what I emphasize is that this is really not new. Anybody who's been making money out of content creation should already have been paying income tax.
Wow. So just stop it at that. We're going to take a break and we'll be right back. And when we come back, we'll be talking or getting clarification on Marcus Petroleum, because I think there was something